So today we're going to do a whiteboard video. Feels like I've neglected the whiteboard the last kind of couple of videos. I've not done it for a while, so we brought one back. And today we're going to talk about, is the stock market getting greedy? Because as we look in the stock market today, the S&P 500 once again having a fantastic day, and that's obviously led to my account doing very well. We look at the King. Once again, the King is bossing it and having another really good day. And once again, we're kind of sitting back going, it's going a bit too well at the moment. And because it's been going a bit too well, everyone's kind of going, are we going up a bit too much? Is the market getting a little bit too carried away here? What should we kind of be doing? So I thought I would have a talk about this current situation and kind of where to go from here. So I hope it's helpful, and I'll give my thoughts at the end of what I'm doing with my stocks as well. So first of all, greed versus fear. Let's have a look at some of the key indicators out there. Is it greedy? Is the fear out there? It is more towards greed, and that's to be expected when you have the stock market run up how it is doing. There is going to be a little bit more of a tilt towards the greedy side, and that's what's going on. And as well as that, consumer confidence is getting a lot more better. People are a lot more happy about the economy, where the stock market is, and obviously that's why we've seen the money kind of inflow back into the market. We're seeing people go, you know what, it's actually worth me buying at these sort of levels, even at 52-week highs right now. Clearly people are looking at the stock market going, even with the run that we've been on, I'm still going to put in the money from here. So you would look at the side at the moment and say it is getting towards, the feeling out there is that it is getting a little bit greedy out there, but there's always one or the other that I feel like, there's always that time where there's never anyone out there that goes, the market isn't greedy, it's perfect, it's exactly where it should be. You never hear anyone say that. It's always greedy or fearful, and it's always where the market is going. If the market's going upwards, oh, it's a greedy market. If the market's going downwards, it's always fearful. It's never against the trend that we're on. And for me, I always say, like, we are actually in an okay place. When I look at the market here and I look at the stock market, I look at the market and think we are quite fairly valued. We're not all-time highs. I don't think we deserve to be at all-time highs, but we're definitely not where we were a year ago, and I don't think we deserve to be at all-time highs yet. I think the market's quite fairly valued. So I think sometimes people are rash to say, oh, it's a greedy market, is it a fearful market? I think the market is exactly where it should be. It's not as good as where it was, but it's definitely not where we were 12 months ago. The situation for the market has got better since then, and for companies. And the next thing is valuations. What are the valuations like? Well, if you look at the valuations, they're still not too bad. If you look at the S&P 500 on a forward earnings basis, it doesn't look too badly valued. It might look a little bit slightly richly valued, but you got to remember that's being led up by, in particular, quite a few, only a couple of stocks like Nvidia and Microsoft. You take a look at like the S&P 600, the S&P 400, a lot of the small caps, a lot of those companies are still at quite cheap valuations. So you could have the stock market in general stay pretty flat, but all the other stocks kind of play catch up at the moment, a lot of the small and mid caps. And that would also mean that you do quite well. So you shouldn't just judge the market as a whole and go, everything's kind of at a rich valuation. Them 6 stocks could be at a rich valuation, but you've got the whole, even the other 494 companies in the S&P 500, they could still drag up quite a bit from here. So that's also a key thing to be kind of looking at. And the thing is earnings. You got to realize that the last 12 months, in the company's earnings, you've had the pressures of the likes of the shipping containers, the costs in general, the inflation pressures, the energy pressures that are going on. You've had all that pressure on the companies. Now, what you're going to see in the next 4 or 12 months is you're going to see companies actually do quite well, because all of them pressures that were on the companies have now become massive tailwinds for the company. And because of massive tailwinds, what you're going to see in 12 months is earnings actually do really well. So the market's also thinking, like, it's not pricing it on what it is now. It's not going to price where the stocks and businesses are right now. It's already starting to think ahead, where are the company earnings going to be. And a lot of the companies at the moment are going to have good earnings because they've took the really hard numbers in the last 12 months as well. That's obviously going to be really key. And the big thing is when you look at greed and fear and the run that we've been on, I think the run's deserved, because when you look at the problems are going. When you look at the problems that we had 12 months ago to justify the drop, to justify the big amounts of fear that we had out there. We just talked about, the inflation pressures, the Ukraine-Russia situation. There's so many things that were going on in the world only 12 months ago, and you look at them, all of them are kind of going out of the way now. So I think the market deserves to be on a run. I don't think you can say the market is greedy just because it's been on a run. It's because we were so beaten down, and all them things that were causing it to be down have started going. So I wouldn't say that we are in a greedy market just because we've gone on a run. We've gone on a run because the stock market took a massive dump, and those pressures have now gone. And the big thing is when you look at history, what does history tell you? Well, the last time we had a major dip was 2020. Crazy to say, 3 years ago now, 2020, and I'd say that probably 30% of you guys that are watching this video were in that stock market crash, and you guys can obviously share your experience with other people. Is that I remember when the CV dip happened, and it was brutal, and we then rebounded, and that was a lot more of a V-shaped recovery, not like what we've had now, which has been a lot more of a steady recovery and a steady drop. That was a V-shaped drop and a V-shaped recovery. And I remember when we got back to the levels of where we were in before the CV crash, and then we got back to the levels that we were at, everyone went, right, we're back at where we were now. The market's got a little bit too greedy. It's starting to tick a bit too much upwards now. But the big thing is a lot of companies were expanding their profits at the time, the revenues were going higher as well, and they were doing really well through the CV situation. And just because we got back to where we were, everyone turned around and went, the market's getting a little bit hot now, I'm going to sell all my stocks, or the CV situation's only going to get worse. We started opening up and then it'll close back down again. Time to sell all your stocks because it's this CV thing is going to last on for a year, 2 years, and it kind of did drag out a little bit. But a lot of what was going on in the stock market thinks, we might have the CV situation continue, but the earnings are going to still do okay, and the companies are going to still do okay. And if you bought in the V-shaped dip and just saw when you got back to where we were, you missed out on a big rally. And that's the big thing. You don't want to miss out on, you don't want to just sell because we're back where we were. A lot of these companies might do very well going forward. And the big thing is that, especially, that 2022 dip that we've been through, you've really, that's been a really big slog, and now you've just started going up. You've only just started going up here. We're only, 6 months into the rally. The average bull market lasts for 4 or 5 years. So if this bull market is going to continue for 4 or 5 years, and you've gone through the pain of buying these stocks, you don't want to sell the stocks out just because you've been on a 6-month rally. Because if we're going to head into a bull market that lasts for 4 or 5 years, you want to be holding them stocks. You don't want to go through the pain of buying them stocks, and then as soon as you get a little bit of profit, then go, right, I'm selling out of the stocks. Because probably if we're going to have a good market for the next few years, you probably want to hold them stocks at really good averages and not sell too early, as we saw through the CV time. So you want to be, really careful of that. But there is always certain circumstances where you might want to just, rebalance the portfolio, and, you might slow down your buying here. And then if we do go back down, then you've started building a cash pile up once again, and, then you can buy it. You want to maybe play it like that. But my thoughts is this, I wouldn't say that we're greedy. I wouldn't say we're fearful. I think we're in a good position. I think the market's rallied up. It deserves to rally up. We're not in the same position where we were 12 months ago. We're not at 52-week highs. I don't think we deserve to be there, so that's absolutely fine. Maybe in 12 months we deserve to be at 52-week highs, and we'll see what happens. But I'm happy to just kind of hold it here. And I tell you, if we were at 52-week highs or all-time highs in the stock market, and we were back at where we were in 2021, I probably would still hold the stocks, because I don't know if we're ever going to get, a dip like that for many years. A dip like we've just been through only happens every, 5, 6, 7, 8 years. So I don't know if we're going to get one of them for a while. So I don't want to, gambling on praying there's going to be a dip coming again, because we might not get one for a while. So I want to just make sure I'm doing really, holding now through, I bought the stocks through the pain, and now we're getting the rewards. And my thoughts are is that the only things that I'm going to be selling really is any sort of balancing out in the portfolio. If there's any time where, if this is my stock market portfolio, and let's say that all of this is one stock, and I've been buying in that dip and buying in that dip and buying in that dip, and it's now committed to, like, let's say 25% of a portfolio, that's the only thing that I'd be altering now, is like I'm rebalancing the portfolio, because I bought it, it's gone up, it's a little bit extending now, that position, get it down to a bit more of a healthy position. That's the only thing that I would be doing is just rebalance the portfolio. Or if there was a stock, let's say a stock like this, and let's say, I'm going to try to move out of the way because I don't know if you can see that, but let's say this stock goes up 100%, then obviously 100% is a rapid gain, and I probably would have thought, my upside when I bought that stock is 100%. If that's the case, then there'll be probably a point where I go, you know what, it has gone up quite a bit. Let me just, sell, this little bit out here. Let me just trim the position slightly and take a little bit of, risk off the table. That would be the only thing that I kind of consider. But overall, apart from that, that's where I'm at with the stock market. I'm a big fan of holding now, because if this is the bull market, I don't want to sell out too early, because obviously I want to make sure I get the if this is a bull market out, or bull market for 3, 4, 5 years, I don't go through that pain that I've been buying them dips for ages and then just sell out just because I've seen a bit of green. So for me, I'm happy to say I think the market is okay at the moment, and even if I did think it was greedy, I still won't be wanting to sell out in positions, because we might not get that dip again. To get that dip again, we had all them fear factors of inflation, the war, all them sort of issues. I don't know if we're going to get that again, so I won't bank on that situation anyway. So hope you enjoyed the video anyway. Just a little bit of thoughts there anyway, and a bit of muttering on in the background. So I hope you enjoyed it, and I'll catch you in a bit.